Hey TSW Forex, welcome to the final chapter of phase 1. If you made it this far, then congratulations. We're gonna jump straight into the practical aspects, and this is the final aspect of the theory. So this is a TSW Forex free course, and let's jump straight into it. So in chapter 9, we're gonna discuss types of traders. So types of traders. In trading, there are many types of traders. For each trading style requires a unique style of approach. It can either be short-term or long-term. Each trader is required to find the style that minimizes their loss and increase their success. So the types of traders. The 6 types of traders: scalper, day trader, swing trader, position trader, algorithmic trader, and event-driven trader. So let's discuss the scalper. Scalpers are short-term traders focusing on holding positions for time frames as small as a few seconds to a few minutes. Now, this strategy involves trading frequently throughout the day with the intention of achieving small gains at the busiest or most liquid times. Scalpers are continuously faced with processing new information and reacting to rapid market changes. The trader is required to ideally be observant, instinctive, and quick-witted, but stoical under pressure. The second type of trader is the day trader. The day trader usually analyzes the market at the beginning of the day, acting on their bias, and then finishing the day with either a profit or a loss. These kinds of traders do not hold their trades overnight. So right before the daily close, they finish all their trades. To be successful as a daily trader or a day trader, the trader needs to be ready to adapt to quick changes in price, as well as be cognizant of techniques important to his or this style of trading. The third type of trader we have is a swing trader. Now, most traders who trade are usually between the first 3, which is the scalper, the day trader, and the swing trader. So most trades, it depends on the types of setup that you have, and most persons will transition into each. So you might be scalping the market and realize, hey, this can be a day trade, and then you may be doing day trade and realize, hey, this can be swing. So we can have a trade lasting for more than a day and then transition into a swing trader. So let's talk about what a swing trader is. Swing traders are for those people that like to hold on to a trade for several days to several weeks at a time. These types of traders usually don't monitor their charts throughout the day, so they dedicate a couple hours of analyzing the market overnight to make sound trading decisions. This type of trading is less frantic than scalpers and day trading. So extreme alertness is less of a requirement, but the trader still requires a strong eye for detail when it comes to chart analysis and news events. And of course, we say that technical analysis is one of the most important things when it comes to these types of trading styles. The fourth is position trading. So a position trader holds trade for long periods of time. This can last for several weeks to years. As the longest holding period among trading styles, position traders are less interested in assets' short-term price fluctuations and more concerned naturally with the performance over more sustained time frames. With these traders, the fundamental aspects are the predominant factor when analyzing the market, and therefore make their trading decisions based on them. So you will have, for example, Britain leaving the EU. A position trader would have looked at the market, find major resistance levels, and during that time period when Britain announced Brexit, they will short the GBP against the US dollar or maybe the Japanese yen, and shorting that will cause, of course, we will have leaving the Brexit will give investors and traders uncertainty about the economic status of the country. So that is what a position trader would do: look at major news events and hold their trades for weeks to years. A thorough knowledge of fundamental factors are required and a high deal of patience. So as we said, the fundamental factors, we already discussed what fundamental analysis is. So the Brexit was an example of that. The fifth type of trader is algorithmic traders. Algorithmic traders rely on computer programs to place trades for them at the best possible price. Traders can use defined instruction or high-frequency trading algorithms to either code the program themselves or purchase existing products. This type of trading suits people who are comfortable with using technology and want to apply it in their Forex career. Given the nature of the programs, algorithmic traders will also have a keen eye for the technical charts. Now, normally people will call this AIs or IAs. So different depending on where you go, you hear it called a different name. But really and truly, it's just a software that is placing the trades for you. Most persons don't use them because it's not always reliable. But you do have good algorithms out there that can do the trades. But you won't know until you try it. The last type of trader is event-driven trader. Event-driven traders look to fundamental analysis over technical charts to inform their decisions. They seek to benefit from spikes caused by political or economic events, such as non-farm payroll or NFP. We'll discuss those later on. GDP, gross domestic products for a country, and then unemployment figures and elections, etc. This type of trading will suit a person who likes to keep up with the world news and who will know how events can impact markets. Inquisitive, curious, and forward-thinking, you will be skilled at processing new information and predicting how global and localized events may play out. So the event-driven traders always look at the high-impact news. So it's similar to how a scalper would work. You look at the high-impact news along with the technicals and see how they align. And then based on how the market reacts to that, they will trade accordingly. So this is the end of chapter 8 and the end of phase 1. Well, if you have finished phase 1, it is all about the theoretic. I tried my best not to go on the charts because I wanted it to end quickly. Finishing the theoretical aspects will lead us into the practical aspects when we are on the charts. So when I'm using certain terms or when I'm explaining certain things on the charts, I expect the viewer or the trader to understand the key terms and the key words that I'm using as it relates to trading. Thank you for watching. Thank you for subscribing, and I hope that this chapter or phase was educational for you. Phase 2 and phase 3 is reserved only for students, but I hope that phase 1 was educational and good enough. So thank you for all your support, and see you in the next video.